Hi, good afternoon, everyone. Okay, thanks for coming to the session on crypto tokens and blockchain. My name is Carlos Domingo, and I'm the founder and managing director of a tokenized VC fund for ICOs called Spice VC, and I'm also the founder and the chairman of a company to issue security tokens called Securitize. I've been in the crypto space now since a while already. I moved from my previous industry, TEKLE, last year, and this is probably one of the best decisions I've taken ever because this industry is just starting and it's very dynamic and there's a lot of things happening. What I'm going to do is I'm just going to walk you through a brief presentation, just summarizing some of the things that happened throughout 2017 in the space, and then we'll do the panel here with my colleagues. There is one which is on his way, so that will give him time also to arrive. So that's the topic we're going to talk, and what I like to do on these presentations always is to just get a sense from the audience about where you are in this space. So how many of you actually own any cryptocurrency? Can you raise your hands? Wow, I'm impressed. This is, I've been asking these questions for months in different conferences, and this is by far probably the one that I got the biggest number of hands. So how many of you actually participated on an ICO? Okay, a little bit less, but still a decent number. How many of you are thinking about doing an ICO for your startup? Okay, not too many, but at least some of them. So this is good, and it's getting better over time, like the amount of people participating in this space. But how many of you have actually used this piece of software that I'm showing you here? Okay, I can see you're a lot younger than me. So this is Netscape Navigator. Actually, unfortunately, Brendan is not here yet, but he was actually an employee of Netscape when this happened, and he invented the main language for programming this, which was JavaScript. But Netscape Navigator was the first, let's say, commercial way for people to access internet, okay? And they did an IPO, not an ICO, but an IPO, which was the equivalent of the ICOs before, in 1995. And if you look at the history of internet, 1995 is considered kind of like the year the internet really started. So the internet had been around since the 80s, so it was not a new thing, but it took a couple of decades for this to become a thing. And in 1995, when Netscape did the IPO, everyone was talking about internet, but there were only very, very few people using internet. There was less than 1% of the population in the world using internet. So I like to refer to 2017 as kind of like the Netscape year for crypto, because everyone now is talking about crypto, but nearly no one has actually used it. So the penetration of crypto is very small, and it's just a start. And even though Bitcoin has been around for close to 10 years, it's still a very immature, and it's an industry that is just starting. And the tools are as immature as this browser that if you see it now, or you see this picture of Yahoo homepage back then, you will see it's very primitive compared to what you're doing today on internet, and the same thing happens on crypto, okay? So let's talk about Bitcoin. Bitcoin is the first cryptocurrency, as you know, is the one that still carries the weight of the industry. Is the first blockchain, the first public blockchain has ever existed. So I think it has a lot of merit, and this is where we need to have a lot of respect for it. And one of the things that have made crypto to be a thing that everyone is talking about is precisely the bull year that the Bitcoin prices have had and how much it has increased in value. As you can see, this is more or less where we are now. This picture is from like a couple of weeks ago. This changes constantly, so it's almost impossible to always have the latest one. But basically, we have Bitcoin now at 128 billion market cap, Ethereum, which we'll talk about $74, Ripple 29, and then a bunch of other coins, which are basically the blockchain 3.0, if you want, generation of coins, the new blockchains that people think that might in the future become the new Bitcoin or the new Ethereum. Okay, so. One of the things that happened this year in 2017, which is very interesting, is it happened the first, major, I will say, fork of the Bitcoin blockchain. Okay, so how many of you own Bitcoin Cash as well as Bitcoin? Okay, so if you had Bitcoin in summer, the chain fork, and then you got Bitcoin Cash, and I think this is another interesting thing that has happened in the industry, which has shown people that this is open source software, and therefore, if the community doesn't agree with one way of doing things, they can go and fork, and if they have enough support from the community, they can actually do something else. Interestingly enough, the fork happened because of the fees of Bitcoin. People complained that they were very high. If you look at the red line, the one that goes above, and the red line below, the red line below are the fees for Bitcoin. Actually, interestingly now, after Bitcoin got forked and you got Bitcoin Cash, the fees actually dropped, and it's actually now very cheap to transact with Bitcoin compared to what it was before. Now, the other thing interesting happened in 2017, which was also partly responsible for why the market grew so much, is that we started having futures and derivative instruments, regulated instruments that you can actually trade against Bitcoin or in favor of Bitcoin without actually holding any Bitcoin. This is very critical because this opens the market for not just the millennials or the techies, but also for the institutional investors, and it means more money being put into the industry. So this is one of the main reasons why crypto has grown so much towards the end of last year. Okay? Now, of course, you have people that don't believe in Bitcoin. You know who this guy is? This guy is Jamie Dimon. He's the CEO of JP Morgan. He is famous for claiming that Bitcoin is a fraud and that he believes it has no value and it has no underlying value. But the reality is that the dollar or the euro or the peseta we used to have here in Spain or the franc, also doesn't have any underlying value. It has the value that we want to assign it because it's the consensus of the people that you're going to use it for doing things. So claiming that Bitcoin is a fraud because it doesn't have an underlying value is actually not a very meaningful answer. In fact, after that, he said he's not going to talk about Bitcoin anymore, but he kept talking and talking about Bitcoin, and finally, he basically said that he regrets calling Bitcoin a fraud because he basically understood that this is not a fraud. This is actually something that's here to stay, and it has the opportunity to be very revolutionary and to change the world of finance as we know it today. All right. This guy has a history, as I said, of regretting comments about Bitcoin, and every time he talks about Bitcoin, Bitcoin goes up in value. So next time you see Jamie Dimon talking about Bitcoin, you should just buy Bitcoin because it's probably going to go up in value as well. All right, so we don't know what's going to happen this year with the price of Bitcoin. We've had, the last few months, both bulls and bear markets where the price went up and then went down again. Now it's going up again. I think that volatility is one of the many issues. And if you look at the volatility of Bitcoin on a daily basis, it's more or less around 7.4%. It's actually much higher than it was a year ago. And another topic that I want to talk in the panel, which has started in 2017, and is going to become a very important topic of discussion in 2018, is about what people refer to as stable coins. These are coins that are cryptocurrencies, decentralized cryptocurrencies like Bitcoin. Actually, Richard was telling me he invests in Basecoin, which is one of the most known ones. These are cryptocurrencies that try to be stable on the price, so you can actually use them as a medium of exchange to pay for things. And the main problem with Bitcoin today is that the high volatility of Bitcoin doesn't make it as something useful as a full currency. It's more of a store of value than something else as medium of exchange of unit of measurement. Stable coins have the promise of being full cryptocurrencies, completely decentralized monetary policies, not controlled by a government, but controlled by an algorithm, but being more stable in price, so you can actually use them for more things. All right. Let's move on to talk about the second blockchain, Ethereum. Okay, I think the biggest news of Ethereum this year is they finally got a killer application, which was the CryptoKitties. How many of you own any CryptoKitties? Has anyone bought? So CryptoKitties is a game where you can actually buy unique characters. You go to this website and you can actually buy one of these CryptoKitties, which is basically represented on the blockchain in a unique and non-fungible way. And even though it's just a game, and it didn't actually, change the world or anything, I think it was the first, time that a lot of people in mass, they experienced a decentralized application. And this is what Ethereum is about. Ethereum is not a currency. It's a platform for applications that you can execute in a decentralized way. So you can think of this as, instead of using Uber or Cabify or whatever, where there is a centralized application that actually dispatches the taxi to the people and decide at their own will how they're going to charge for the taxi, how many commissions they're going to take, if they're going to have surge pricing. You can have a decentralized Uber where the network, in a decentralized way and in a programmatic way will basically assign you a taxi when you request it to the network, and then this way you can actually reduce the middleman and reduce the intermediary and hopefully reduce the fees and the cost of the services. So decentralized applications are very important. That's what Ethereum is about, but Ethereum is also about something else. Ethereum is actually the platform where people run ICOs. Ethereum is becoming the programmable money platform where people are basically using tokens that they can go and sell to the public in exchange of some sort of form of either utility or securities in your company. What I think is we're going to talk about when Brendan comes here about Brave. He was one of the first high-profile ICOs. He sold something called the Basic Attention Token, which basically brings together through a cryptocurrency the users, the advertisers, and the publishers. So I'll let him speak more if it comes on time. The thing I want to mention is that ICOs so far have proved to be the best returns in any asset class in the industry. If you had invested in all the ICOs, that are visible, so all the ones that you can get access to the internet, you can actually multiply your money by 13 times, investing in all of them. So you will invest in the good and in the bad ones. So imagine if you were actually good at picking ICOs and you pick the good ICOs, you could actually make more money. And this is one of the reasons people are so excited about this, this market, because it's opened up new ways of funding, and it is intermediating the traditional venture capital firms. All right? The thing I think is going to happen with ICOs is that people are abusing the utility token type of ICO. I was just talking to someone on the press, and imagine if you go to this plaza that they have there, down there on the other side of the hall, where you have all the different places where you can actually buy food, and imagine if every one of them had done an ICO, and you need to have a different token, utility token, to basically pay for the things in a different way there. It's actually not very useful, right? So I think utility tokens are great, and they have a certain market niche that have an application, but people are now abusing this concept and trying to build utility tokens artificially in many companies just as an excuse to do an ICO. I think this is a very bad practice, and all of you guys that raise your hands about doing ICOs, if this is what you're planning on doing, please don't do it. There is a different way, which is so-called security tokens. The SEC, the American regulator, has already talked about most of these utility tokens actually being securities because they are sell for profit. They are not sell actually to use it. So what we think is going to happen, and that's another topic I want to discuss with the panelists later, is that we're going to enter kind of like the second wave of ICOs, where people will move from utility tokens into security tokens, which basically give you, some form of ownership into the business, whether it's, equity, or it could be revenue share, it could be dividends, it could be some form of economic interest in the asset. And the interesting thing is that then you can apply this not just to startups, but you can apply it to many other things. We have tokenized a fund, we're tokenizing real estate, we're tokenizing many other things which are not necessarily just startups, as a way to then, provide liquidity to the people. All right? So ICOs, what's next? We're going to discuss it on the panel. We have Richard here, who has just published a report on tokens, which I think is very interesting. I would like to hear more about this in a minute. So the third topic of discussion here will be the third largest cryptocurrency, which is Ripple. As you know, Ripple is a very polemic coin, if you want, for a number of reasons. First is because it's not a truly decentralized blockchain. Second is because it's being used by the banks, not to disintermediate the banks, but just to make them more efficient. And third, because the coin itself, XRP, is not clear that it actually has any direct relationship to the actual usage of the technology by the banks. Okay? So we have here Julio from Banco Santander. He's going to tell us more about what they're doing with Ripple. They just announced that they roll out a Ripple Power app in 4 different countries. I think this is a different type of blockchain. It's more private blockchain, permission-based, not necessarily the public blockchains like Ethereum or Bitcoin, but nevertheless, it's also something interesting to follow in the industry. All right? And to finalize, before we start the panel, the other important topic is regulation. This morning when I was doing interviews, one of the things that a lot of people ask me is like, aren't you afraid of being on the crypto space? What happens if it gets shut down and if it gets prohibited, and you lose your job and you cannot do anything else? And I say, well, I think unless you're in China, where the Chinese government has taken the decision of very aggressively ban all the ICOs and prohibited all of them, what the regulators are actually saying about crypto is actually very positive. You need to read exactly what they're saying. This guy, which is the chairman of the Futures Trading Commission in the US, is one of the #1 regulators for financial instruments. He actually has expressed a very strong opinion about trying to bring a positive regulation around crypto to protect the interest of the new generation, the millennials, towards this new technology. And so far, all the SEC has said, hi Brendan, all the SEC has said and all the CFTC has said is very positive. There's countries that have even gone beyond that. You have in Switzerland, the Minister of Economy of the country has basically publicly stated that they want to become the crypto nation and they want to be the nation that is more friendly towards crypto. And this is very important because this means there's starting to be regulators and places in the world where people are embracing crypto, and rather than try to shut it down, they're trying just to make it something that benefits the entire industry in the country. And this is particularly important in a country like Switzerland, which is known to be basically a country where their main business is actually the financial services industry, right? So if these guys are adopting this, which has the potential to disrupt their own main industry in their country, I think it's pretty relevant. All right, so we're going to talk about 2018. I'm going to be following these topics with the panelists. Now we've got Brendan here already. And then I just want to leave you with one message. A lot of people are also asking me, just because Bitcoin was invented in 2009, What are you doing in 2017 when you jump into crypto? Isn't that too late? And the answer is the following. This is just the tip of the iceberg. We're just seeing the beginning of the industry. Okay? If you look at the aggregated market cap of all tokens and cryptocurrencies, it's around 0.5% of what is called the M2 money supply, which M2 money is basically all the liquid money in the world. So it's tiny. It's just starting. It's a very, very, very small percentage. If you look at the actual market cap of crypto, it's smaller than the market cap of the top companies on the internet, like Google, Facebook, or Amazon. So again, these are just single companies versus potential future industries. If you look at how many people use crypto, we're in 1996. It's less than 1% of the population are using crypto. Only 70 million people have actually used crypto once. There is only 20 million wallets that have more than one Bitcoin. So this is a very, very tiny percentage. Obviously, the people here in this panel is not in this talk is not representative of the average of the world, because I saw a lot of hands saying that you guys have crypto, but it's definitely not a thing for the majority of the world. Okay. And when you talk about ICOs, even though it looks like everyone is doing ICOs and everyone is investing on ICOs, ICOs are tiny. They are less than 10% of the crowdfunding on a worldwide, which is around $50 billion a year, and there is less than 1% of the venture capital money. Venture capital is bigger than 600 billion, and ICOs last year were just 5 billion. So again, ICOs are just starting. There's a lot of noise in the market. I agree with that. There is a lot of bad actors that need to be removed, and regulation needs to come, but this is here to stay, and it's going to get much bigger. And then the final thing is, like, are we in a bubble or we're not in a bubble? Well, I think we're quite far away from being in a bubble. If you look at the size of this bubble, if this is a bubble, it's a very small bubble compared to other bubbles. At the peak of the dot-com bubble, you know, the NASDAQ was worth $22 trillion. $22 trillion. The entire market cap of ICOs is 60 billion, so it's a tiny fraction. So perhaps we're in a bubble, but I don't think it's a bubble that's going to burst tomorrow. I think it's going to get much bigger before something happens. And then keep in mind that bubbles and speculators are not necessarily a bad thing, because speculators are just people that risk their money in the expectation of a bigger return. And speculators help build industries because they are the first ones that bring money to basically help other people you know, create things. And some of us are investors in crypto, and you can refer to us as speculators. I don't mind. I don't think it has a negative connotation, as most people say. I think we're helping, you know, create this new fascinating industry. All right? So thank you very much. Let's move to the panel with my colleagues here, and these are the topics we will be discussing. Thank you. All right. So let's do a round of introductions, everyone. So let's start here, Brendan.
Sure. Hi, I'm Brendan EICH, founder of Brave Software and the Basic Attention Token, which we launched with a token sale last May, which clogged Ethereum for 24 seconds, raised about 36 million notional in ETH. Before that, I did Firefox and Mozilla. I was a founder, and I created JavaScript in 1995. So I've been through the dot-com bubble.
Richard MUIRHEAD. I'm the founding partner of Fabric Ventures, and we're entirely focused on backing folks like Brendan, although we didn't quite. That's another story. And my background before that is that I also was around for the dot-com. I built network management software back in the mid-90s, tried to create some new protocols to make the internet better, discovered how hard that was, went through an IPO at a pretty crazy time, and built another couple of software companies before I found my way into investing. Very excited to be here.
Hi, I'm Julio FAURA. I head R&D and blockchain in Santander. I'm also the chairman of the Enterprise Ethereum Alliance and the chairman of Alastria, Spain's enterprise blockchain that we launched last year. And most of my passion is about the use of blockchain for enterprise purposes.
My name is HENOK TEKLE. I'm a founding partner of Alphachain. It's an ICO advisory and investment firm. We primarily partner with early stage projects and help them with the end-to-end process to launching a token sale, and then post-ICO with exchange listing, you know, community building, and market making as well. I just arrived from Bangkok this morning, where I met with Vitalik Buterin yesterday, so there's a delay in my answers. Forgive me.
All right. Okay, let's start. Can you guys please keep quiet? I know I'm actually positively surprised the room is completely full, and there's even people standing in the back. So let's try to keep quiet so we can hear each other. All right, so let's start talking about ICOs. Let's just go around. You did one of the first high-profile ICOs. I remember I contacted Brendan after he did his ICO, and because I could not believe how he raised so much money in such a short period of time. So can you tell us a bit about the experience and what do you think is next?
It was something we knew would work if we didn't make some smart contract mistake. We were studying Golem network token from 2016. We had very expensive advice from Perkins Coie and Deloitte, but it was worth it, I think, even now. And we had a utility model. We wrote a white paper, which I think is being copied a lot now, which is, I guess, flattering, which actually was a economics white paper that had a quantitative analysis. So it was a serious white paper, and we intended to develop a utility token and comply with the relevant laws, not do a security issuance. So we did it purely on Ethereum, arbitrated by gas. And the only thing I would do differently if I did it over again, I would do two things. I would raise the cap quite a bit, and I would match the amount we pre-created in a user growth pool, because one of the key ideas and reasons we did this was a kind of social credit token issuance to users and creators. And now we're using the pool we pre-created to reward YouTubers and users of Brave, and we're building the platform through this reward mechanism. But if I had to do it all over again, I would have balanced that pool in size with the amount that was sold. We saw it go so fast, we knew we could have gone bigger. We therefore benchmarked later sales like Status, Banco and Tezos, and happy to help benchmark them and not be super big. I can see too much money is a problem sometimes. I'll leave it at that.
You had just did a donation to tokens to the users, right?
Yes, we created 360 million, roughly, tokens before the sale that are now worth quite a lot and being used to reward users who come on the platform. We're also taking on creators on YouTube and other platforms like it, Twitch is coming fast, who are upset because they're often demonetized or subject to arbitrary changes in how much money they make through advertising. We're making a new platform that blocks ads as a baseline and then rewards creators from users and soon from advertisers. So we're giving out these tokens to get people on board, and we're giving them as a referral award to creators who bring their followers, YouTubers who bring their viewers to Brave. And Bart Baker is now enthusiastically on board, among other YouTube stars.
Good. So Richard, you guys just published this fascinating report about ICOs. Can you share with the public what were the main conclusions of what you guys did there?
Yeah, sure. In brief, and happy to point to it later so people can download it. I guess some of the headlines quickly, and I'll sort of describe quickly how we got to making this report, are that I'm going to start with the European kind of cheerleading, which is that there's an awful lot of activity in terms of raising money through token sales and also through contributions to projects on GitHub related to decentralization that is taking place from Europe. And of course, you know, we're super excited to see so many people in the room here today, hopefully as evidence of that, you know, burgeoning ecosystem. So we documented some of that in the report. We also documented the fact that of the kind of almost 1,000 kind of ICOs last year, sort of around about a third of them, it was pretty hard to work out what actually happened to them, whether they failed, whether they just petered out and so forth. That's not necessarily a bad thing. We're at that stage where there's a, you know, survival of the fittest. There's a, you know, you've got to fail to learn and so forth. So I think that's just fine. A good proportion of the token sales related to, if you will, infrastructure components of this new wave of computing. And we think that's good news too. And in fact, you know, at Fabric, we're very much focused on predominantly on what you might think of as the picks and shovels of this new wave of computing. Picking up on what we've been discussing, I think we're very much in the first, you know, single digit or single digits maximum of, you know, the deployment of this phase of computing. And that connects with, you know, what we really feel is so super exciting is that, you know, if you go right back, software is this crazy thing which is pretty much just limited by, you know, human imagination. And when people invented open source software, that was even more liberating. You could build it all the way around the world. It was open to anybody to participate with and contribute to. But for many decades, it's been struggling to find a business model in many respects. And so where we find ourselves at the moment is that open source software is trapped within, you know, the tech titans who give it sponsorship and deliver closed networks where, in combination with our personal data, often, and they make an enormous amount of money. And this is now a new age, which I think is tremendously exciting. It's very democratized, it's very distributed around the world. People can unleash their imaginations on these new open source projects. They can get them funded, and through clever design of crypto economics, as Brendan was just referring to, and I don't think it may take a little bit more than just copying and pasting his white paper. You can solve the cold start or chicken and egg problem within a digital network of open source nodes, and really solve some problems that people hadn't considered soluble before, but also disrupt many of the existing players. So we're super excited about the picks and shovels and tools, like, for example, ways to upgrade smart contracts, ways to tackle the security and scalability within this new computing paradigm. Those are the types of projects that we're investing in.
Good, Julio. So give us your perspective on utility versus security tokens, since I know this is something that you're interested in.
Yeah, this is something I wrote recently about, and yeah, I couldn't agree more with what you said, right? I think ICOs can bring a good new way to raise money for startups, right? Essentially, if you're a startup, the only option you have is venture capital, and venture capital does have friction. Essentially, it will make you illiquid for many years. And also it's not very transparent, right? The way venture capital raises money is from big institutional investors. You know, from time to time, there could be opportunities as well for affluent or you know, retail investors as well, right? So I think ICOs are probably a good idea to, or at least another mechanism to raise funds. As you said, I mean, I don't think utility tokens are a very good idea, because getting utility subject to a speculation is probably, you know, going to make services more expensive. It's going to be making the price not predictable. It's not going to be universal, as you just said, right? This idea of having one token for everything, for different things is difficult. Whereas security tokens, I mean, I think our job is really to make security tokens really look like securities, right? And make them regulated in a way that can bring us all the benefits of ICOs. Essentially, the idea would be to create something similar to an IPO, but at a lower level suitable for a startup. I think that idea is quite powerful. So I think there's still some way to go. Also, the idea that ICOs raise cryptocurrency essentially, not fiat money, it's can be as well an issue, let's say, right, for some institutional investors. Something we're working on is the idea to create this digitized fiat money, this utility, this stable coins, as you were talking before, and maybe the idea of even creating ICOs that raise not only cryptocurrencies, but also digitized fiat money could help as well in this sense. So I think it's very early in the process, but I think the idea of having regulated ICOs that can represent a real opportunity to raise funds as securities in the startup world is a very appealing one.
Good. So HENOK, you are one of the top crypto investors, and your channel is always presenting you know, interesting ICOs and projects. So can you tell us more about what is interesting out there? What are you seeing? What are the trends?
Well, we've seen a massive evolution of the ICO space, even in spite of an absence of any you know, overtly strong regulatory decrees from agencies like the SEC. And what I mean by that is, if you go back to last summer, where the basic attention token ICO, that time of year when it occurred, it was very uncommon to see KYC and full accreditation requirements for ICO investors. That's really started to ramp up to where now it's almost a given. Public crowd sales are increasingly fading away. You're seeing most projects preferring to raise their capital needs entirely in the private sale and cancel the public crowd sale. Maybe go with an airdrop campaign where they just drop tokens to, you know, assuming it's an ERC20 project, anyone that has Ethereum in their wallets, or just completely skipping that altogether, and after the private sale, eventually listing tokens on the secondary market on any number of these exchanges. So we're really seeing a a lot of self-policing in the space, and less of the kind of short-term, immediate hyperbolic returns. I think over time we're starting to see that it's more of an exception than just kind of the rule.
So the 12x investing in all ICOs, good and bad, this is not going to happen again?
Well, we've seen a lot of growth. So if you look at last year, the beginning of the year, the total market cap for cryptocurrencies altogether was about $15 billion. Within the same year, the market cap surpassed $600 billion. So that's a 37x of the overall market. Ethereum alone outperformed the entire market. So I think it started the year around $8 and ended somewhere around 800. So that's about 100x there. You're starting to see that we're kind of receding from these large valuations of the Tezos and EOS variety. It's coming back down to kind of sub 30 billion or $30 million raises. It's kind of a thing now where people, if they didn't get in the private sale, they're just not going to purchase tokens. So it's really early speculative fervor more than utility. I think the volatility that you see in these prices are indicative of tokens as a tool for fundraising versus actual utility in the solution.
I think I cannot agree more with that. So today in the crypto market, there is two problems to make this mainstream. I would say one is volatility, as you guys said, and the whole story about stable coins is a potential fix for solving this in certain use cases. And the other one is scalability. So I would like to go through the panel and get your view on scalability. What do we do if Bitcoin and Ethereum don't scale? Are the new generation blockchains like NEM, NEO, EOS going to solve this, or we need to try to fix what we have? And then what do we do with respect to stable coins and volatility?
So I'd just like to observe something I saw on Twitter. Willy Woo, user's handle is Woonomic, WOONOMIC. December 19th last year said, here's the chart of volatility. Basic attention token was second lowest. Lowest was US dollar Tether. So, and 7.3 in our white paper makes an econometric argument for why it's better to have a token in a growing market. It's better to have a token that is not buffeted by sort of exogenous supply and demand speculation. So over time, we expect the stability to increase. But scaling is a separate thing from volatility, right? So you're quite right. Volatility is mostly speculative. Scaling is something we manage by not doing much on the chain. And this is good for basic attention token because it's predicated on privacy. So in Brave, which is the first of many clients we hope operate this way, there's a private ledger that's recording your attention over 30 days of uptime. It settles in one transaction on chain, and that transaction does not telegraph your creators and websites you're supporting. That's conveyed through a separate zero-knowledge proof protocol channel. We are looking at Ethereum state channels. We're looking at ZK, Snarks, and Starks. It's all early days yet. Maybe we'll have to migrate to a later blockchain. I'll just quote Jurassic Park about the dinosaurs that managed to breed in spite of being genetically engineered from sterile amphibian DNA. Life finds a way.
Yeah, I mean, Brendan's in a better position to talk about a specific project, but the same kind of projects that he referred to, we talk about a little bit in the token market report we produced. And, I think they shall probably bear fruit, but also, different projects and chains will specialize to different use cases, where scalability is more achievable within a sort of constrained set of requirements. And I think it's always good to remember that, if you look back, there was a time when, messenger chat from AL Messenger ICQ was causing problems for the internet, and indeed that just before YouTube was a success, it just would not have worked. So life does find a way, and the internet certainly shall. So I think in terms of volatility, the only thing I'd comment there, when we're sort of talking about that bridge between crypto, tokens and fiat and so forth, was maybe a sort of provocative thing, which is that the incredible thing that we've created here, or has been created here somehow, is this platform for permissionless experimentation. And it's taking place now around this concepts of ICOs and token sales. And essentially what's being rebuilt is the whole kind of capital markets infrastructure, including data and the whole gamut. And it's interesting when I talk to some institutional investors about their skepticism about coming and getting involved, they raise questions about things like, how do I trace who's got what, and have a register of shares or tokens or whatever, how do I deal with KYC AML? But our observation is that there are actually incredible projects seeking to solve those very same problems. So you're going to see a fresh set of infrastructure built with all of that baked in and automated and transparent. And I would suggest that we're going to see all of those capital markets at some point. It won't be about the bridge between today's currencies and these cryptocurrencies. It'll just be about how what is being built now subsumes everything we take for granted today.
So, Julio, do you think that one issue to deal with the scalability is to reduce the decentralization of blockchains? Because, in a blockchain you have three things, right? You have decentralization, and then you have, the consensus mechanism, and then you have the scalability, right? And people say that it's impossible to get the three of them at the same time. So either, if you want to increase scalability, maybe you have to reduce the level of decentralization or the level of consensus required to accept transactions. That's kind of what Ripple does to some extent, right?
Yeah, I think, the full decentralization conflicts kind of with performance and scalability. And it is true that we are at least exploring other spaces, right? So in one extreme, you have the totally decentralized networks, like Ethereum or Bitcoin. On the other extreme, you have centralized networks, or even single servers, right? The less decentralization, the better performance. Now, what we are trying to do is at least explore and characterize whether there would be points closer to the fully decentralized networks that could boost a lot scalability and could provide other benefits as well, which are also bottlenecks for today's widespread adoption. Probably the most important is privacy, besides scalability and cost as well. And that would be the point of semi-public permission networks. And Alastria is a good example. In Alastria, you would have like 200 companies, and then you will have about 30 nodes that will be playing a validator role, kind of the miners, right? Is that decentralized? Well, it's not fully decentralized, but these 30 validators are going to be like banks, oil companies, even public administrations. I mean, there are people with a reputation that can lose if they act funny, right? So it's not fully decentralized, but many people believe is good enough. And with those things, with those constructs, you can have much lighter consensus algorithms, and therefore you can get a lot more performance. Today in Quorum, which is the technology, the base technology we use in Alastria and in many other permission networks, you can get hundreds, if not thousands, of transactions per second with one block finality. You get privacy as well. You can do private smart contracts that can interact with the public smart contracts, and it's all quite performant. I think in general scalability will be one of those issues, but if we believe that tokenization is important, right? Tokenization meaning connecting the existing enterprise systems with the blockchain systems. I mean, using smart contracts to digitally represent assets that otherwise live in the enterprise systems, then connectivity is a big bottleneck as well. So we need permissioned, networks we can control to make these things legally compliant, right? And I think that is another of the bottlenecks. In my honest opinion, I think the Ethereum community and maybe other communities as well will solve this scalability issue sooner or later. I mean, they will do sharding, they will do state channels, they will do, I don't even know what they will do, but they will make this thing huge. You just need to see what they've done in the past 3-4 years. So eventually it will be solved. It's just that for the time being, I think permission networks and semi-public networks are a good proxy with which we can start to reap the benefits. That's what I think.
Good.
Yeah, and scalability is the central issue in the Bitcoin community, and how to kind of address that challenge going forward. So, gets at the heart of the debate is, do you want the Bitcoin protocol to serve as a medium of exchange or a store of value? And that really speaks to what you're seeing with these forks, where An example, with the miners that support Bitcoin Cash, prefer to see Bitcoin act as a medium of exchange, so to bring scalability by increasing the block size. But then you have the Bitcoin core community that would prefer that protocol layer serve as a store of value, something equivalent to gold, and then have a layer built on top of that. So what you're seeing with the Lightning Network, where you would process transactions off-chain, eventually settle them on the Bitcoin blockchain, but that also compromises decentralization. So that's just the central debate in the Bitcoin community, which has long suffered governance issues that I'm not really seeing in the case of Ethereum, which may, I think, overtake Bitcoin in market cap ultimately, and also progress beyond the challenges that is plaguing Bitcoin right now.
I think governance is an important thing. The thing a lot of people say in the community is that because Satoshi Nakamoto is not there anymore, then the Bitcoin community doesn't have someone to refer to when there's a debate about what to do, and this is why they have all the problems they have. But the Ethereum community has Vitalik Buterin, which they have to look at it and takes decisions and then gets things moving, right? So yeah, there's an argument of why one chain will develop faster than the other one just because of the governance around, right? So do you want to mention something, Richard?
I was just going to build on your comment about the 12x returns you made earlier. So very arguably, of course, that kind of portfolio is overly diversified. And actually, if you go back to the first crypto investments we made in 2013 and take those, we're sort of more than 3x that over that time period, about 4 or 5 years, which is about a typical deployment period for a venture fund. And so, so that's interesting because typical venture funds don't return 36x in 4 or 5 years. A great one actually typically is anything over like 3.5x. So the question then begs the question: what's going to happen in the future? Is this going to continue to develop that way? And look, we were hearing a little bit about the development of the token sale, how people are moving away from the public sale. I think it is going to continue to be very important to make a broad placement of tokens if that's central to your model for token economics, your quote-unquote business model, if you're a consumer player and you need that. But we see a lot of sophisticated projects where people are starting with an equity round and then moving through a series of simple agreements for future tokens and so forth. So people are being more deliberate about it now, understanding that being suddenly in the limelight with a lot of cash burning a hole in your pocket, be it crypto cash, can bring its own challenges and problems. And so we'll evolve in that way, and we'll see some really big wins, I'm sure 100x's out there, and we'll see some failures. But if you think about this new wave again, what is really being done, it's about, I like to think of it as truth as a service almost, and something that is in bringing, ironically, sort of trust to trustless networks. Something that's key and at the heart of the convergence of machine learning and Internet of Things and dealing with things like autonomous vehicles. It's a new way of handling data that is central to computing in the coming decade. So I'm not promising we'll see 36x in the next 5 years, but should be much better than 3. Okay.
Just a quick comment on how we approached our token sale. Since it was early and we had a utility model that we believed was credible, we did it publicly. I teased Vitalik on Twitter because people were complaining that they couldn't buy any BAT in the initial sale. And so he wrote a blog post that nicely illustrated 5 problems, a dilemma and a trilemma. And the dilemma is basically what we were facing. The small buyers were being squeezed out by expert large buyers. And so I said, okay, we'll raise the cap. And then the small buyers said, no, I'll be diluted. Well, you can't have it both ways. And there was no good solution at the time. We've seen some sales try to use sort of advisory KYC where you hold up an identity card and take a selfie. But sophisticated buyers can work around these limits on whitelisted addresses and how many tokens they can buy. We also didn't want to just airdrop because that's just within the existing non-zero balance Ethereum world. It's a small world. We're trying to bring usable crypto to the masses by almost defacing it from the user interface. So it's not visible, but it's easy to use. You can have time through the 30-day donation cycle and in future ad revenue share cycle to repudiate, change your mind. It's more like frequent flyer miles or a small change that the user has custody of. It's not the scary thing where you see, Coinbase accidentally debiting your bank account that you've connected repeatedly when they should have done it only once. So I'm not sure who was default. Coinbase was definitely, yeah. Okay, I love Coinbase. But there are so many sharp edges on the current, early stage tech, which I love and I've lived in for forever, my whole career, that it's not ready for prime time, and yet we need to get to average users. So that's one of our goals, and it's not airdropping, it's user grants in a usable user interface.
Tell us more about what you guys announced with Ripple and about the 4 banks working together. I think that's an interesting project for people to learn more about.
Yeah, it is. It's really a payments pilot, a payments platform. Essentially, we use blockchain technology in this case to connect banks or financial institutions to send the payments, right? And it's nice because you can essentially create next day payments and reach many other geographies, right? So it's an example of using blockchain technology. I mean, this is really Ripple's new technology, which is not technically a blockchain, it's an interledger protocol. That's exactly that. But it's a good example of how you can use decentralized technology, decentralized ledger technology to connect banks and to create payments in this particular case. Now, beyond that pilot, there's a lot more work going on of the overall idea of digitizing money and using this money digitized in order to do payments, and not only payments, but liquidity management, which is really the big issue behind payments, right? Many of the payments experiments that we see out there, all of them need pre-funded Nostra accounts, and pre-funding liquidity is actually something expensive. So using digitized versions of that money with the smart contracts allow you to reduce these liquidity needs, and that can make really banking infrastructure a lot more efficient, right? So I think it's a good example of enterprise use of blockchain technology without cryptocurrencies. Just
so
to
you don't use XRP?
Yeah, we don't use XRPs. It's just the payments part. It's just the messaging layer. We're not really using XRPs to exchange liquidity. I think when it comes to exchange liquidity, we are experimenting a lot with the idea of creating these stable coins, as you call them, right? Which is digitized versions of money, particularly central bank money, to get banks to exchange value. The most famous or the most important one probably is the one called Utility Settlement Coin. This is a project we launched on a derivative of Ethereum built by Clearmatics that essentially represents central bank money, an RTGS account on a smart contract. And therefore, banks can exchange payments, can exchange liquidity, can do delivery versus payment as well using these kind of stable coins.
Okay. What do we do something since we have 10 minutes? So we open to any questions here, and then we do a round of closing. Anyone wants to ask any question? I don't see anything with the lights, so. All right, so is there someone that can circulate this? They're coming. All right.
Hi. Hi. Yeah. Hi, Miguel Valls from Alta. As you probably know, yesterday D-Wave just published that they raised 50 million on their first quantum computing solution coming to the market probably in the next 6 months. How do you think that can affect crypto world?
I just couldn't understand
Do you hear me?
Yeah.
Yeah, okay. D-Wave published yesterday a fundraise of 50 million and promised to bring the first quantum computing solution to the market in the next 6 months. Okay. How do you think that's going to affect crypto world?
So it's about quantum computing becoming a reality. I haven't heard of this company, so I cannot comment specifically, but if you guys...
D-Wave from Canada. the first company bringing 65 qubits to the market.
Thanks, we'll share this. I used to study physics. I actually employ someone who was a real physicist for a long time, and another person who's also a former physicist. There's somebody named Gil Kalai who works in Israel who's written about quantum computing possibly not being possible due to noise. The jury's still out. D-Wave is doing sort of an analog device. Last I checked, it was doing simulated annealing. It was slower than your MacBook Pro or MacBook Air. I don't think there's going to be any quantum breakthroughs in the next year.
Yeah, Apple is in computer science. When I studied 20 years ago, we studied the same thing. Quantum computing is not feasible. It's not something that's going to happen. I'm very surprised that it's going to be ready in 6 months. Depending, my guess will be depending on the actual quantum computing capabilities. If they can process much faster, you know, the crypto community can always make things, you know, the keys longer and things like that, just to increase the level of difficulty, right? So I don't think that this will be a problem short term. At least I don't see that happening.
If the future crypto economy provides the business case for creating the first quantum computer, then great.
All right. Anyone else?
Hello? Yes, here?
Yes, please.
Right over here. So the question is...
You're there? Okay.
Yes. Hi. Yes, so the question was, you've spoken a lot about currencies, and I was wondering about other use cases for blockchain technology. And yes, this is an interested question because we're a blockchain startup. So, and I was just wondering about that. Where do you think other fields, and specifically currencies?
I personally see two things, right? Anyone that intermediates with value and trust can actually be replaced by a blockchain, right? Because the blockchain provides you the way to interchange in a decentralized way value and trust without the middlemen that traditionally you had, like a bank or financial services, a lawyer, broker, etc. So anything has related to capital markets, as Richard was saying, this will be disrupted. Now the other side of things is the decentralized applications like Ethereum, which basically allow you to then decentralize any application. Like you can decentralize Uber, you can decentralize Airbnb, and eliminate those middlemen that to some extent are also intermediating with trust and confidence, right? So you use Airbnb because you know they're going to make sure that you can they will send the money if the house was exactly as was supposed to be in the pictures, and they will also insure the other guy, blah blah blah. So this trust that they provide by sitting in the middle and that they charge for it, this could be replaced with blockchain. So I don't know if you guys.
Maybe to sort of elaborate a little bit, I think the use of the word currency causes a fair bit of confusion. So just speaking for ourselves, I gave a kind of potted history. Our background is, building software companies, including my partner built MySQL, so a lot of open source. And then, so what we're looking for really is people building scalable, decentralized networks within which a software token has an integral role. And that role probably has something to do with authenticating participants in the network, providing access to resources in the network. It might, for example, mean that if you have a certain number of those tokens, that you win the right to do some future work within that network, a little bit like a taxi medallion in New York. So there are various things that, it's not exactly the typical historical role of a currency that the token is fulfilling. It might be that token actually also serves the function of an internal currency within that network that just, makes things operate within that network. But indeed, there might be a need for a stablecoin which provides an interface out to the fiat world for some of the purposes. And so what I described as there, actually, those different functions could be the underpinning functions of a decentralized Uber, in fact, if you're trying to speculate on how that would work. But so I think there are lots of examples of non-currency uses of tokens and blockchains, and those are predominantly the things we're looking to invest in, frankly.
So what I would say is that one of the keys to enable new use cases and also to perform some use cases that are kind of optimizations of today's world is the process of tokenization. If we generalize the idea of digitally representing using smart contracts things that otherwise live in the I hate to call it the real world, let's call it in the enterprise systems they live on, there's a lot of things you can do. For example, you can create tokens that are rights to consume electricity. You can create tokens that are crypto euros, let's say, right? You give me a euro, I put the euro in the bank, I give you a crypto euro, which is a token that lives in a smart contract. And then you can create an application to exchange those things. And therefore, you can create a system that, with which you can recharge your electric car, paying with digital money. This is something you can do with today's systems, but it's too expensive. You need credit cards. I mean, the average recharge in Spain is about €5, right? If you use the banking system to do that, it's going to be expensive. There are many examples. Suppose, for example, you tokenize the right to to start a car, right? Therefore, you can pay with coin tokens, cars, and you can create a new rental car service or a car as a service company, for example. There are many uses. If we can think of ways to digitally represent, as I said, rights to use physical things, there will be a lot of use cases to think about.
So we have only 4 minutes. What I'm going to do is give you 1 minute each to do one prediction of what's going to happen in the crypto space in 2018. And next year here, we'll see whether any of those things happen. So, HENOK, you want to start? Could be price of Bitcoin, could be size of ICO markets, could be someone going busted, some new application being fixed, whatever you guys feel.
Sure. So I don't think this year we're going to see the kind of year we had last year, where I think in Carlos's initial remarks, 13.2x return across all ICOs, even if you pick the bad ones. I think there's evolving game theory that's really ramped up in the past year. So it's always a game where projects are really trying to find the best ways to align interests of the public with their own needs as a project. So what you've seen is lockups, for example. First of all, bonuses or discounts offered to investors for investing early in a project, but then having those bonus tokens locked up for a certain period of time, 6-7 months or something like that. And obviously that would be very unattractive to the kind of speculators that are drawn for the early, very liquid, type of returns. They have to really look carefully, and it's almost going back to like a venture model, but kind of adjusted for crypto. So I think you're going to see more sort of regulatory scrutiny, more careful due diligence on the part of projects and to who they open up their allocations to. And I'm not saying there's not going to be these hyperbolic returns that we saw last year. I just think it's going to be fewer and kind of more niche and selective.
Good. 1 minute, please. Otherwise, we're going to run out of time.
I don't really want to make predictions. I'm very bad at that.
Come on,
but let me at least try to make some wishes, right? So I would like this year to see a lot of improvement in enterprise blockchain technology. Also some more usage of blockchain technology in enterprises and public administrations. And I'm hoping to see also more collaboration. There's a lot of collaboration already, but producing the first results between collaboration in the startup and public blockchain world, mainly Ethereum, and the enterprise world. I think this year we should be seeing the first big enterprise-wide permissioned blockchains, and that should be an interesting, at least, alternative to public blockchains.
Richard?
So on my last panel earlier, actually, I tried to give Visa a hard time about how they were going to find it pretty hard to switch their model to a non-business model. I tried to give the banks a hard time about their view that this is about how to bridge between the capital markets and the crypto markets. But I don't think either of those really big changes are going to happen in the next year. What I hope is going to happen is that actually we're going to see a simmering down of some of the frenzied excitement and frenzied price growth, and that we'll get back to the really tough job of building great software and projects and teams and companies, or at least foundations who are backing these different projects. And I'll take something upon ourselves in the venture world. We've spoken about a little bit, but definitely we have to adapt quite significantly to this new world. I think there's new forms of data. You have to think about custodying the token. You have to work out how governance is going to operate in this world. And we have to do a great job also to contribute to the success of those new projects. And I hope that'll start coming about this year.
So I made a bet on Twitter with some Bitcoin maximalist who was trolling me that in next January, the ratio of BAT to Bitcoin will be better than it was that day, which was like 6 to 100,000. I think I'm going to win this bet. I think BAT will also be among the low volatilities, according to Woonomics. We'll find out.
What's the market cap now?
350. I haven't looked lately. The user growth pool I mentioned that we have to give out to people is like 150 million. So we're poised to give out a lot. We've got a lot of resources.
So download the browser.
Download Brave, brave.com.
All right, thanks to the panelists and thanks everyone in the public as well.